Is there really a silver shortage? Short answer, no, not the kind you're thinking of. Not the empty vaults can't find a coin anywhere shortage that the doom and gloom crowd likes to sell you. That's not what I'm talking about, and honestly, that's not what a real shortage even looks like. So let's clear this up, because I get this comment all the time. Someone says, there's no shortage, I just bought a 10-ounce bar online last week, and look, that's not the point. Retail hiccups happen, premiums spike, dealers run low, wait times stretch out, but that's a demand spike, not proof that the whole system is fine. The real shortage is structural, and it's happening in the flow of metal, not on some dealer's shelf. Here's the plain English version. 2026 marks the 6th year in a row that silver demand has outpaced what mines and recycling can actually supply. Over that stretch, we've burned through roughly 1 billion ounces of above-ground stockpiles, and those stockpiles are not infinite. So why doesn't this just fix itself? A few reasons. First, most silver isn't even mined on purpose. Only about 28% comes from primary silver mines. The rest shows up as a byproduct of mining copper, lead, zinc, or gold. So higher prices don't automatically mean more silver gets pulled out of the ground. Second, industrial demand isn't optional. Solar panels, EVs, electronics, data centers, they need silver no matter what the price is doing. And third, the drawdown is invisible until it isn't. Stockpiles quietly absorb the deficit for years, and everything looks fine, right up until the buffer runs thin and price has to start doing the rationing. Now, if you want to actually understand where the metal sits, you've got to stop confusing two things, COMX and the LBMA. COMX in New York is the futures exchange, and its warehouses report two categories, registered and eligible. Registered silver is pledged and ready to settle contracts. Eligible silver just sits in the vault, unpledged. So when you see headlines screaming that COMX is draining, it's usually just the registered number falling, while eligible metal can still convert over. That makes it a stress gauge, not a doomsday clock. Then you've got the LBMA in London, which is the bigger physical hub, mostly over-the-counter trading. But here's the catch, a lot of that metal is already spoken for. It's allocated to ETFs, central banks, clients. What actually matters in a real squeeze is the free float, the small slice that isn't already locked up. And that free float is exactly what this ongoing deficit keeps eating away at. Now let's talk about squeezes versus corners, because people mix these up constantly. A squeeze happens when too many people are obligated to deliver or buy back metal that just can't be sourced easily, so the price gets forced higher. A corner is different. That's deliberate. One buyer intentionally locking up enough deliverable supply that short sellers can't get their hands on it. That's the Hunt brothers back in 1980. A squeeze is more like what we saw with Wall Street silver in 2021 TODS, no mastermind, just a crowd all reaching for physical metal at the same time while the float was thin. And by the way, that whole move helped make silver the best performing asset of 2020, beating Bitcoin, beating Amazon, beating Tesla. Funny how the same basic behavior gets vilified in one case and celebrated in another, depending on who's telling the story. And here's the part almost nobody talks about. Military and aerospace demand for silver isn't even included in the official numbers. The Pentagon stopped publicly reporting its silver usage back in the 90s, and aerospace doesn't report at all. Everyone points to solar and EVs as the two biggest demand sectors, but military and aerospace could easily be bigger than both, which means the real deficit, the actual gap between supply and demand, is almost certainly bigger than what the official reports show us. So here's where that leaves us. No, there's no empty vault, zero silver anywhere apocalypse happening. But yes, there is a real, structural, multi-year deficit and a shrinking cushion of free-floating metal standing between today's price and the next violent move. Low supply. Rising demand that isn't going away. That's investing 101, and it's exactly why silver has more upside sitting in front of it than almost anything else out there right now. That's it for today. This has been Silver Slayer. I'll see you tomorrow.